Good afternoon, traders. Hope everybody is doing great today. It's Wednesday. It's hump day. We're halfway through the week. And it's been a moment since I've been live hanging out with y'all. So I thought today would be a great day to come on and jam with you guys for another TrendSpider Office Hours session. Now, if you are new to TrendSpider Office Hours, this is your chance to ask questions, dig into the charts, dig into the tools that you can utilize on TrendSpider. I am here as your liaison. You know, if you've got stuff that you're curious about, I'm here to help you solve those riddles that you are running into when utilizing the platform. If you missed it yesterday, we had a huge announcement. We just launched a brand new mobile app. This thing is completely redesigned, completely reimagined. If you'd ever used our mobile app before, yeah, it worked okay. It was a little limited in scope. It is not limited in scope any longer. I'm going to link you guys really quickly to the announcement so that you can read through it in your own time. I'm not going to go crazy going through all of the little minutia details of what is available. But in essence, the tools that you've come to know and love, here I'm pasting it in the chat right now, the tools that you've come to know and love on the platform, I'm talking things like auto analysis tools, auto fibs, auto trend lines, chart pattern recognition, candlestick pattern recognition, that's all in there now. We've got all of that additional data that you know from what's happening now. We're talking unusual options. We're talking seasonality. We're talking analyst estimates. We're talking insider trades. All of that stuff is available in the app now. So think of like your what's happening now space transferred over into your cell phone. What's more is you can filter all of these things. Like you're used to filtering your data inside of what's happening now. You know, right here, I'm on unusual options, and we can filter unusual options in all of these unique ways by tags, by open interest, by premium, strike price, type, days till expiry, and so on. Well, you can actually do all of this filtering in your mobile app now too. So it kind of is like, you know, you really have no excuse to ever miss a beat in the markets now. You don't necessarily have to be in front of your screen all day to really get the full breakdown of what's going on. We've got active watch lists. So any watch list is essentially, or not any watch list, but you can utilize your scans in the mobile app now too. So you can be looking for opportunities in real time as you're out shopping at Target with your significant other or out to dinner with your friends or what have you. The point is the app is pretty baller now, and it's only going to get more powerful. And this is the first big change, the first big new iteration that we've brought to you guys in a while. So we're really excited about it. Hopefully you guys are too. There are a few of you guys here right now. I would love to, you know, find out what y'all got going on. What's up, Haverell? Haverell. Does the new app work on both iPhone and iPad? Now that is a good question. The iPad I don't have an answer for. I should ask that though. Let me ask that for you really quick, and I will report back. I know that there are Apple and Google versions, Android and Apple versions. So you can get it in the App Store or in the Google Play Store. Let me find out though. I'm going to ask right now. Give me 1 second. You couldn't get it to work with iPad. Okay, that's good to know. Let me find out. If you couldn't get it to work, then my guess is that it doesn't, which is unfortunate. I'm not aware of of the specifics on that. But I'll find out for you, Haverel, and I'll let you know as soon as I know. What's up, Billy Megahertz? How are you doing today, sir? What do you guys want to jam on today? I don't have a real agenda. It's just been a couple of days since I've been live and I've been feeling bad about it. It defaults to the browser-based app. Okay, that's good to know. Thank you for letting me know. I will report back on whether or not there is a plan for that to change. If there's going to be a iPad specific, because I do know there are users like yourself out there that really like to do all of their work on iPads. So I'll find out and let you know if anybody responds to my question during this during this live stream. I'll let you know. If not, I'll address it. Haverel, do you follow me on Twitter? If you don't follow me on Twitter, hit me with a follow and I can DM you as well. Roblox, I saw it had a big day. Presumably earnings. I wasn't paying any attention to this one. I've just been focused on the indexes today. Yeah, so earnings, huh? Let's see something. So really quickly, I'm just utilizing the assistant to bring up Roblox earnings for me. See what the story is here on today's announcement. Revs of 3.3 to 3.4 billion. Bookings of 4.14 to 4.28 billion. EPS beat estimates 52. So quarterly losses of 52 cents versus the expectation 56 cents. Quarterly sales of 750 million, which missed the analyst consensus estimate of 1.07 billion. Yikes. So they were $250 million off the estimate. What's up, Chris? How are you today, good sir? Hopefully you're well. What do you got your eyes on today? Billy, you had surgery. What'd you get worked on? Hopefully you're doing okay. Everything all right? Hopefully routine and not emergency. Looks like last quarter, looks like this is kind of a standard operating fare for Roblox to gap up or gap down on earnings. Holy moly. It's kind of interesting. You had a gap down on back in November 2022 on those quarter 3 earnings. You had a gap up quarter 4 2023, or quarter 4 2022 rather. Another gap down August last year, so quarter 2, quarter 3, quarter 4. Lots of gaps. You're learning about successful traders, Minervini, Quillmaggy, etc., who use a specific trend-based strategy. Absolutely. Yeah. So which one do you want to focus on? Let's talk about this. I've got something pre-built that I made not too long ago for Minervini. I think, anyway. At least I did. Where was it? Might have changed the name of it. But if you want to jog my memory on that, Haverel. Quillmaggy. All right, let's look up Quillmaggy. What's the strat? Or Koulamagi. I'm probably saying that all wrong. Christian Koulamagi. My $10 million setups. Let's see. I'm just looking on this. Koulamagi. All right, let's see. Breakouts. If you study it's what he says here. Let's look at this. I'm going to bring this over here real quick. If you study thousands of the biggest winning stocks over the past 100 years, they tend to move in stair step, meaning they will make a 20 to 50% move, pull back and go sideways for a while, then make another move. This is how most leading stocks act. This pattern is something we as traders can use to our advantage to get an edge. How to find these setups: scan for 1 or 2% of stocks that are up the most over these 3 time frames: 1 month, 3 months, 6 months. Okay. So we could do that. And we could do that in a number of ways. I was actually just talking to a colleague about this kind of idea about how to measure percentage change. Because it's kind of an interesting concept, right? Like we could do very simply. So I'm just going to say price. We'll say monthly close greater than price monthly close. And then I'm going to put this as one candle ago. Just because I want to define this month. Where we're at this month, essentially where we're at right now is going to be what this is going to define. The price, the monthly close of this current candle, all we have is the current price right now. So it's going to compare that price to January's close. Now, in this scenario, like what you're looking for here, potentially this is not quite going to find what you're after because we're only a few days into the month. So then it may make sense to say like last month's close is greater than the previous month's close. So January close greater than December close. You could also, in theory, this is the conversation that my colleague and I were having. Do you compare the price relative to the open of the candle? Or do you compare it to the close of the previous candle? Because you can have scenarios, especially like on the daily, you could have gap ups, right? And so if you're looking for percentage change on the day, are you comparing it to where it opened on the day or where it closed on the previous day? Always keep that in the back of your mind. But for the sake of this, I'm going to leave this as January close compared to December close. And then we can click these 3 dots here and say add by at least and make it an X percent. And it can be whatever percent you want. You may end up deciding that this is not enough of a percent. You may decide that it's too much. There are no rules. Figure out what makes sense for you and move along. So NVIDIA and looks like Juniper Networks. These are the only 2 names that were up as much as at least 20% from the December close to the January close, right? And presumably if you're only getting 10 or 2 names back, maybe you want to bring that percentage down. See, now I brought it down to 10% and we've got a ton of names here. So what then you may want to do is you might want to also add a 3%, or rather, sorry, not a 3%. He says a 3 month, a 1 month, and a 6 month. So you want to find the 1 or 2% of stocks that are up the most over these 3 time frames: 1 month, 3 month, 6 months. So this is looking at January versus December. You may also want to, I'm going to utilize this button right here. This is the clone function. So the clone function just duplicates the condition. And then I could compare, like, maybe I want to compare the price right now to that. Maybe I want to start thinking further out. So I'll say like 4 months out. Here, what's the current price relative to what, November close or October close. And then it might make sense to increase your percentage that you want it to gain, right? Because we're not just looking for stuff that's gained 10% in the past month. We're looking for stuff that's gained a higher percent over a 3-month period or 4-month period or whatever. We'll make this 3. And so this will filter out the list even more. So now we've just got these 6 names. And if you wanted to, you could as well make it 6 months. And maybe over 6 months, you want to see it have gained even more than that, right? Because giving it more time to gain. Markets have been strong. So I don't know. You may, you might have you might want to adjust these percentages based on kind of what makes a little bit more sense for you. Maybe these specific percentages don't make a ton of sense for you. Hard to say. But this is kind of how I'd be thinking about that. Just to like find those names that are consistently making gains over those time periods that he suggests. So now it's just Meta and AMD. And I'm only scanning through the S&P 500. We could scan through like the NASDAQ NMS or the NYSE composite. And we're obviously going to get a ton more names. But now we're going to get names that maybe we don't care about. What's up, Mike? Hope you're well. Havarel, is this kind of helping you think through this a little bit? Because the next thing that I would kind of suggest here is I'm seeing tickers that are $1.64. I'm seeing tickers that are, you know, like if I filter this by last price, I'm getting a lot of kind of penny stocks in here, and maybe I want to avoid those. So I'm going to add a parameter and say that price daily close is greater than a constant value of like $10. Just so that I can, you know, everybody's different. Some people love to trade these penny stocks, but I tend to prefer kind of, you know, larger cap stuff that has more volume or stuff that potentially has more volume. And you could add a volume condition to this too. You could say something like daily volume MA greater than a constant value of like, I don't know, 500,000 shares a day or something like that. Again, make it make sense for your rules. There are no rules. We could totally talk about unusual options, Mike. So, Havarel, let's do this. Let's call this... How do we spell this guy's name? I'm going to do this. One, 3, 6 month strength. And say save. And I'm going to share this with you so that you have it. Here you go, Havarel. So Mike, let's talk about unusual options. What do you want to know? And Billy, I see you there talking about SMH. You still have ARM earnings. I see you. Yeah, you're welcome, Havarel. And we could dig in further on this topic maybe in a little bit. I want to switch gears here and talk about unusual options for a moment and get Mike's questions answered. So, Mike, what's up? What you want to know, my friend? What about Cheddar Flow? Cheddar Flow is dead, isn't it? Are they still business? All right, well, while we wait on Mike, Hoverell, you said you want to take this thing to the next. Oh, here we go. Basically, how to look. Okay, so a couple of different ways that you can think about this. Let's go to just something big. So you've got the unusual options widget here on the right-hand side of your panel. And what this does, this displays a visual representation of everything that's come through the tape, the past, I believe it's like the past 200 or 250, the most recent 250 or 200 unusual options orders. When you're thinking about how to filter, because obviously, you know, this is interesting to see. We've got a bunch of puts and calls that are being bought and sold here in the near term, right? Your x-axis is time, your y-axis is strike price. So the higher up, the higher the strike price, the lower the strike price. Anything that's in the middle is going to be in the money or at the money. Above this last line here is out of the money, and then below this middle line here is out or in the money. You can, when you're thinking about filtering, you got to be thinking about time, right? You got to be thinking about how long do I want to be in this trade? That kind of, to me, is the first piece of it. If you're specifically looking for, excuse me, if you're specifically looking for an order that you want to kind of jump on board with, you want to be thinking about how long you want to be in the trade for. So does it make sense to be following the leaps that are set for June 2025 if you're just day trading the thing and you're going to be out of it in 15 minutes or tomorrow? That doesn't really make sense. So then your expiration date, you might want to filter your expiration date by something quite closer, maybe April, maybe March, maybe February, depends on your kind of risk tolerance and where your head is at with that. There is the whole other element of options that you always have to consider. You've got the Greeks. That's not considered in any of this. These are just orders, right? So always have the Greeks in the back of your mind. If you're not familiar with the Greeks, one could argue that maybe you shouldn't be trading options. Like, you really should understand the Greeks if you're going to be trading options, because they do affect so much. The next piece here is premium, right? This is how large the order is. Unusual options orders, by definition, are greater than $25,000 in premium. So that's what your slider bar is going to represent, is that minimum of $25,000 up to the largest order currently on the tape, which is $1.4 million. So you could, in theory, if you were looking for kind of like really unusual stuff, maybe you want to filter it down by... I'm sorry, the $1.4 million, there is not an order that big. So let's pull this back. Yeah. All right. So you might want to filter out some of that. I mean, $25,000 is a lot to me to put on a single trade, but, to a big hedge fund, that's literally pennies. So you might want to consider then kind of bringing up that premium minimum by whatever amount that you feel like makes sense. So we can see the largest order right now is of the 250 that we've got. The largest order is March 8th expiry. This was 205% of the open interest. So it's kind of like the entire book of that particular strike. $332,000 in premium for the 432 calls. And then you've got strike price, right? So strike price is what it is. Maybe it doesn't make any sense. If we're trading 432, does it make sense to see anything at 350? I would argue kind of not really. So maybe you want to filter this down a little bit. I'm going to open this back up. And maybe you want to filter this down. Maybe you don't care about any calls above like $440 or something like that. I don't know. And then this kind of gives you a basic colorful view of what is the general consensus. So when I look at a chart like this, I'm just looking for what feels like the general consensus. Is it kind of green leaning? Is it red leaning? So is it call or put leaning? Now, there are, of course, scenarios where you have call selling and you have put selling as well. So like some of the put orders are going to be bullish and some of the call orders are going to be bearish. You do have to dig in a little bit deeper on that. And I'll show you the next way that you can dig in a little bit deeper on that. But like when I'm just thinking about kind of like what's the general consensus, I'm looking for just what color here is more prevalent. And sometimes it's going to be very mixed. It's going to be a clear mix where you can't tell if there's one that's really overwhelming the other. This, to me, looks pretty well biased or leaning towards calls. So then the next step of this way of filtering and looking at what's going on with unusual options is only one way of doing it. And I would almost argue that the better way, or kind of a more efficient way, or maybe, I don't know, maybe it's not better, maybe it's not more efficient, but it's just a different way of seeing it, is through what's happening now. So I'm going to close out this feed, and I'm just going to add a feed here. So I'm going to go unusual options. So this is all unusual options, unfiltered by ticker, right? So it's everything that's coming across the tape. And every single section that you have here has this 3 dots, vertical 3 dots to the right of it. And for every single section, these vertical 3 dots are going to take you to the same place. It's going to take you to the filtering component for unusual options in what's happening now. So I'm going to click on that. And then I'm going to go to filter. And then I'm going to add filter. And again, you can do this now on the app, which is like so cool. This is really, really high function to be able to do on the app. So the first thing I'm going to do, I'm going to say symbol. I'm going to say contains QQQ. And we're going to add a filter. And then I'm going to say, I don't know, maybe premium. And I'm going to say premium greater than, you had said 500 grand, I believe. Yeah. So we'll say premium greater than $500,000. And that's the first piece. So now we're filtering it QQQ, just premium above $500,000, nothing else. What's come on the tape today? Everything that's come on the tape today, for the most part, that is above that price, they're all puts. But were they at the bid? Were they at the ask? Were they above the ask? This is where we can start to gain a little bit of insight into whether those puts were bought or sold. And so it's presumed that if they're paying above the ask for them, and these tags are created by the data provider that we get this data from. So we're not creating these tags. We're not making an assumption. The tags are based off of where the contract was bought. Was it bought at the ask or was it bought at the bid? So in scenarios when puts are purchased at the bid, you're going to have a bullish scenario. If they're purchased above the ask, it's bearish. If it's at the ask, it's bearish. It's kind of the general vibe. And then, I'm kind of always going to be looking for sweeps as well. So really what I'm after personally, the way that I'm going to filter these things down, what I think suggests the most conviction, I'll show you. If you go to add filter and you add tags, and we're going to say contains all of, and I'm going to say above ask. So you put like a little underscore there, above ask and sweep. And the reason why I'm looking for above ask and sweeps is because these people are paying up for it. And they are kind of trying to get it from anywhere they can get it, right? Any exchange that's offering it, they're sweeping across. They're not just like putting an order in one place. They're sweeping. So they're getting it wherever it's available, and they're willing to pay up for it. So that's kind of where my head's at on how this might make sense, or kind of like how to track that conviction, how to find that conviction. So now then it filters us down to just one order. This is the June 2024, the June 21st, 2024, 550 put. We're trading $432 right now. They're buying 552 puts with 134 days to expiry. They're paying $625,000 for this. That's kind of where my head goes as far as like finding the most important stuff. Dark pools data. So if you go to other data here and add dark pool volume, this guy, this is going to show up as a, hold on one sec. So dark pool volume is only available on weekly and monthly charts. I would say the only thing about this is that it's lagging by quite a bit of time. So I'm not sure that this is going to help you in the immediate term. Yeah, above the ask is they want it now. Like they're paying up for it. They're willing, they're not waiting for price to come to them. They're just like, I just want it. Give it to me. I'll pay you whatever you're asking. They're paying above the ask. So that's kind of how I think about it. And then I would take this like a step farther and I would unfilter for the Qs. And maybe, the premium makes sense. Maybe it doesn't. But if you need 500 grand, then yeah, set it at that. And I would say above ask sweeps. These are going to be the biggest conviction, unusual options orders that are coming across the tape today. And then you can kind of gauge it. You can see kind of like how much of the open interest are they essentially the entire open interest on this order, like this TSLL trade here, 4.1x of open interest. The open interest was 1,386 and they bought 5,660 of them. So this is like a really conviction, to me, is like a really conviction trade. Now, whether or not the trade works out, who knows? It's 346 days till expiry, so these are leaps, or they're at least way out in time. Things trading at $8.50. They're looking for 12 3/4, so they're looking for another 25%. Or they're looking for rather 50%, 50% over the next year. But it's a big order. It's a big order relative to what was on the tape before they purchased it. Like this one, Google, the January 16, 2026, the 260 call. This is 2 years out. Things trading at 143. They're buying 260 calls. They spent 2.6 mil. They bought 9,000 of them. Previous open interest was 226. So like nobody was interested in this. It's Google and there's only 226 contracts that are being held and they bought 9,000 of them. That's a big, like, what does that say, Yeah. I mean, it's a leap for sure. It's January 2026. And it's a 260 call, so it's $120 higher from where Google's trading right now. But $2.6 million bet, over 9,000 contracts, 40x the previous open interest. So like nobody was trading this, and somebody came in and just spent 2.5 mil and like owns the entire float of these things. They're not, they're options, so there's not like a float, but like they came in and bought a ton of them relative to what had been purchased up to this point. Compare that to this, like this Disney order here, April 24th, April 19th, 2024, the 105 calls. We're trading 97.48, so it's like way closer in the money. They spent $570,000. They bought 2,354 contracts, but there were already 12,640. There was already over 12,000 in the open interest. So like it took up a much smaller amount of the open interest. So like there's a lot of people trading this particular contract, this particular strike and all that stuff. So though it is a big order, there's a lot of eyes there. This is like nobody's really paying attention. Nobody's really caring about these January 16th, 2026 260 calls on Google, but somebody today came in and bought 2.5 mil of them. Why? You know, it's kind of unusual. Of course, we could filter for Tesla. So just go to filter and add a filter and say symbol. I'm going to show you something real quick. This is how you do it. I can cut all that stuff. Or we could add it back, you know, I don't know. We could add back the premium, make it greater than or equal to 500 grand. And you could add sweeps above the ask if you wanted to, you know, do whatever you want. So here's all of the Tesla ones. We haven't seen an order like that size and that conviction come in for quite a few days. January 24th was the last time we had that big of an order. But let me show you this too. Up here in the assistant, if you click on the assistant and you just type in Tesla options, it'll come up. It'll say see all unusual options for Tesla. And then just click on that and it pre-builds it for you. So you don't have to... you don't have to like do the tagging. You don't have to tag Tesla. You could just go to assistant and you could do this for any ticker. Tesla options. And it opens them up. And then you have to filter. So it's going to filter by Tesla. And then you would just want to filter it additionally. This like how we just did. So maybe you just want to look for premium greater than 500 grand. Since there wasn't anything that was sweeps above the ask. So here's all of your $500,000 in premium Tesla options. And we had one come in today. The June 2026 $200 calls. So again, 861 days till expiry. This thing's trading $188, $851,000 in premium, 7% of the open interest. So not wildly unusual. I would call this one maybe a little bit more unusual. This is the April of this year, the 145 put, 73 days till expiry. Again, 145 put, things trading at the time, it was trading 176.03. They spent 1.25 million. They bought 3,300 contracts for a total of 2.5x the open interest. And these were sweeps. So this was a sweep at the bid. Put sweep at the bid. So they might have been selling these. Because it's labeled as bullish. So that the way that this order set up is it's kind of suggesting that it was selling the options instead of going long. And they did a great job, right? Like it's trading 188. If they did sell these 176, then they cleaned up. Selling premium. Does all that make sense, Mike? Hopefully it does. Exactly. Yep, exactly, Mike. Awesome. Right on. That's great, Mike. How do you script searching for the existence of a chart or candle pattern? Let me show you. So a couple of different things you can do here. If you go to add parameter, I'm going to show you how to do it yourself, and then I'm going to show you what's available too, because it's important to know how to do it. Because what we have pre-built, though there are tons of things pre-built, it may not be exactly what you're after. And I want to make sure that you know how to find what you're after. So when you go into scripting, you click add parameter, say condition. You've got candlestick patterns and you've got chart patterns, right? So if you want a candlestick pattern, pick the time frame that you want it on, and then search the list of names. There are a lot of candles here that you can define. So let's say you want to define, I don't know, engulfing. Pick the engulfing style that you want. You could choose bullish, bearish, or either. I'll say engulfing bullish. And then if you wanted to like look for, maybe you wanted to define this, that, or the other candlestick pattern, we could do that too. Again, I'm going to copy this. Oops, made too many. So I'm going to just click here and I'm going to say like doji, and I'm going to say like hammer. And then I'm going to go to all the following and make it any. So if I were to run this scan, we can just do this now. Yeah, so we get a couple of names that are coming up as either a doji, a hammer, or an engulfing bullish. Looks like it's mostly little dojis. That's how you would script candlestick patterns. When it comes to chart patterns, again, same deal. Type in or select chart pattern, select your time frame, and then just search the pattern that you're looking for. Let's say like falling wedge. Now this is going to refer to the top or the bottom line, but you know, if there's a falling wedge top, then there's a falling wedge bottom too. The reason why you can define these individually is because think about if you want to define where price is relative to them, then you would specifically not just want to say that a falling wedge exists, but that price is within range of the bottom of it, or price broke through the bottom of it, or something like that. So that's how you do that. And then also there's a ton of pre-built stuff. So if I just type in falling wedge, anything that is sample, anything that has the sample hashtag next to it. So these guys here, I have some that are made just that I've made, but like anything that has a sample next to it is going to be something that exists on your end. So like if you just want to see falling wedge exists, select that and it builds the scanner for you. And then the other thing that I wanted to show you was visual scripts. So same idea here. If you type in like, I don't know. If you type in hammer, it's going to yield scripts that are pre-built for different hammer conditions. So I'll say any hammer. And so what it does is it pre-builds this script that's already made. It says any of the following hammer, hammer TPS, inverted hammer TPS. And TPS is the pattern site. So Charles Bukowski, well-known technical analyst, he's got a website called the Pattern Site. On the Pattern Site, he has specific definitions for all of these different candlestick patterns. So we have our own definition. He has his definition. There's not necessarily a right or a wrong. Pick the one that makes the most sense to you. But this pre-builds this for me, any hammer or inverted. And then I could take this and I can say send to, and I can send it places. So if I wanted to, I could send it to the scanner. It loads that into the scanner, and then I just run the scan. If you're looking for, as always, if you're looking for these conditions occurring right now, you want to have that current candle toggled on. But it's current. It's toggled off by default for good reason. We could talk about that if you guys want to. But if you want to find these conditions occurring right now in the moment, you always want to have that current candle toggled on. Haverell, does that kind of make it make sense for you? Give me 1 second. I need to grab something real quick. Sorry. Just looking for something. Ah. Cool. Right on, Hoverell. Yeah. Anybody have any other... Let me see. Market is totally out of sync on bar chart. 90% breakout and only 10% downside. Not sure what you mean there, Billy. I know that people, like even we talked about this this past weekend. It does kind of feel like things are weird because of market breadth. So if you guys didn't know, we do have market breadth available on the platform. And by default, market breadth is fixed to, let me show you, new highs, new lows. So you've got the NYSE composite. You made essentially like a high in the new 52-week highs list back in December, middle December, and this thing has been decreasing ever since. So less names making new 52-week highs while the indexes are continuing to push into new highs. It does feel a little disjointed, and you can actually see this on every index too. If you go to the NASDAQ index, same idea. December 27th was the high of the new 52-week highs list, and it's continued to decline since then. If you look at Russell 2000, same deal. December 27th. Well, actually, the high was December 14th. It probably was the high in NMS too, but decreasing ever since. So it's definitely something that is worth paying close attention to. Now, does it mean that things can't turn around and this thing can start ticking higher again? Of course it can. Give me 1 second. Sorry, guys. Just responding to a colleague really quickly. I'm checking in on this iPad question you had, Haverell. Okay, after the bullish run-up, Qualamagi looks for consolidation, lower volume before the breakout candle, indicating a move up. Okay, so let's talk about that next piece. Consolidation is kind of tricky, but the way that I would kind of do it is I would say something like, I would use the daily time frame. And I would use, what do you call it? Dungeon channels. So let me show you why. And I would compare Dungeon channel to the current state of the Dungeon channel to a previous state of the Dungeon channel. So I'm going to just make that really quick. So I've got Dungeon channel up equal to Dungeon channel up. And then I need to define this as X candles ago. And maybe I can make it like 20 or whatever. And let me show you why I would use that. So if you add a Dungeon channel to your chart, this is what you're going to see. You're going to see something that looks very akin to a Bollinger Band. If you're not familiar with Dungeon channels are essentially just a range channel. That's all it is. As new highs are made, the top of the Dungeon channel increases. As new lows are made, the bottom of the Dungeon channel decreases. And then over the moving average length, like you'll see, even though we didn't make new lows, the lower Dungeon channel is increasing. That's because the length is changing, right? Or not the length is changing, but rather it's because the low is changing per the length defined. So if we have on the Dungeon channel, you have a 20 candle period, then what you've got is here's your low, Here's 20 candles. And then after a 20 candle period, your new low is right here, right? Hopefully that makes sense. And then this will continue for 20 candles. And then it'll jump to the next lowest low, which is right here. You see how that's working? So in theory, if you're consolidating, you're probably not making new highs. You're probably going sideways. If you're going sideways, then the upper Donjon channel shouldn't really be increasing or decreasing. It should probably be staying kind of flat. So then you could theorize, like, maybe you want to utilize this length and say, like, it hasn't changed. So let's just look and see what that looks like. Let me find something that's actually doing it. So you've got, essentially you've got a Donjon channel 20 candles ago that is equal to the Donjon channel currently. It did change a little, but essentially you got sideways consolidation. This way you didn't get sideways consolidation, but you didn't make a new high. It's just hasn't been 20 days since this high, right? And we could keep looking here. Duke sideways since this high, and so on. So what you may then want to define is you may want to find a nice way, Haverel, of defining Donjon channels that make sense for you. So maybe it makes more sense to do like a 50 length. I don't know. But I'm just kind of thinking out loud here. And then you could increase this and you say like 40 candles. And this will give you a slightly different look. Oh, hold on. Let's get this music going. Why did my music stop? Well, hold on now. Yeah, so let me see. Huh. That's kind of weird. It's supposed to be equal. Oh, because I didn't change in here. That's why. My bad. So remember, if you change lengths, it's a very easy mistake to make. If you change lengths of any of your indicators in your scripts, make sure you change them on your chart too. There you go. So here's, 50 candles ago, right, where the Donjon channel is now relative to where it was, or rather 40 candles ago. It's at the exact same spot, meaning we have not made a new high in that time. So this might be how you want to define that. You could also say, to make this even more specific, think about this. You could say price close, daily price close, within range of indicator, daily Donjon channel up, right, by like 0.05. So now the Donjon channel hasn't increased or decreased in this 40 candle window. So it's just gone sideways, meaning price has either just gone sideways or it's slowly declined. And price is really still pretty close to the upper Donjon channel, right? So price is close, but it just hasn't broken out yet. And let's see, let's run this again and see what we can find. And nothing, of course. So maybe you need to adjust your percentages here. All right, let's say 1.5. All right, let's do this. I'm going to say NMS instead of the NASDAQ 100. Things have mostly been gaining, right? So it's going to be hard to find stuff. So like this. It's kind of more like maybe what you're kind of looking for or something. It's not exactly what you're looking for. This might even be too much. Maybe let's make it 2%. I don't know. You got to really play around to figure out what the right settings are. But hopefully this gives you a little piece of like how to think about it. This is just one tool that you can utilize. Clearly this isn't quite the way. Maybe we need to make it a much smaller or a bigger percentage. So make it 5%, within 5% instead of 2. And maybe this length isn't right. Maybe 50 candles is too many. You're talking about it's like 2 months of consolidation. Maybe that's not exactly what you're after. But hopefully that makes sense. And then if you wanted to define the volume piece, let me show you really quickly. These are kind of more like what I assume you're looking for, like this BRZE here, this ICF. You know, I don't know what they've gained in a 3 month, 1 month. I don't know. You know, maybe they haven't gained like what you're looking for in those time periods, but steady gaining higher, doing that consolidation thing. And then when you're looking for volume decreasing, what I would do is you could say indicator, you could say daily, type in volume, and you want to use volume MA. In my opinion, you'd want to use volume MA because it's a little bit wider of a calculation. You're talking about a moving average volume, so a 20 candle average volume, as opposed to volume vol, which refers specifically to the volume on one candle, and you can define that one candle. So if we're just generally looking for like volume decreasing, you would just want to say moving average volume comma MA is less than indicator daily volume MA X candles ago. So maybe 20 candles ago or 30 candles ago or whatever. If you wanted to get more specific with it, you could say something like 5 candles ago, and then you could duplicate this and you could say 5 is less than 10, right? 10 is less than 15. 15 is less than 20. I'm going to remove these just so that we get some easy results here so we can kind of look at it. So Nike, let's zoom in to the chart and see, even still, you see how it's Nike's not looking quite like what we're after. It's kind of hard to tell. Let me do this. I'm going to add the lower volume indicator instead of volume. Yeah. So specifically what we're looking for, let me make this white. You're essentially just looking for this white line decreasing over a period of time. And that's what we've defined. As long as, you know, it's currently less than it was 5 candles ago, 5 candles ago was less than it was 10, 10 was less than 15, 15 was less than 20. You're going to get names that meet the criteria. So this may not be exactly what you're after, but again, hopefully it gets you thinking in the right direction. So Haverel, have we got your questions answered today? Have we managed to do it? Hopefully we did. If so, I'm coming up on an hour, which means it's about time for me to get on out of here. But if anybody has any last minute questions, I'm happy to answer them. It doesn't have to be necessarily a hard stop, but if nobody else has anything that's pressing, then we'll call it today and we'll come back again another day. Awesome. Right on. We've done our deed for the day. Well then, with that, guys, I'm going to jump out of here. It has been a great pleasure hanging out with you this afternoon. Thank you so much for being here. Thank you for your questions. I love it when you guys give me questions like this. So this is what this show is all about. It's really all about kind of answering what you got in real time. So hopefully this helped, not just Haverel. Hopefully all of you guys tuned in, learned something today. If you didn't, well, we'll come back again. We'll do it again. G-Sal, is it possible scan to screen for stocks with 7 red candles? Of course, dude. Of course. Let's do that. What is a red candle? A red candle is when the price closes less than it opened, right? So you'd say price, daily close, less than price, daily open. If you want 7 of them, duplicate it 7 times. And then make it 1, 2, 3, 4, 5, 6. Right? 1, 2, 3, 4, 5, 6. 7 red in a row. I doubt there's anything in the S&P 500 meeting this criteria right now. Let's look at the NMS composite and see. BWFG, CNOB, and so on. Yeah, there's your 7 candles in a row. Red. Can you identify all time frames? Up to 4, Haverel. Up to 4 in the scanner. And there are kind of workarounds if you think about what moving averages are, right? Like a 5-day moving average, or let's say a 20-day moving average is the same as like a 4-week moving average. So like you can kind of play around with time frames if you think about lengths of moving averages, if 4 of them doesn't do it for you. But you can have up to 4 in the scanner. Real quickly, GSAL. I'm going to share this with you so that you have it. All-time high price. A little bit trickier. A little bit trickier. Show you why. The way that I would do it is I would utilize a big time frame. So I'd say like monthly close, or rather monthly high, greater than indicator, monthly range, high. I'd offset this by 1 so that we don't include the current high in this calculation. And then I would just do like, I don't know, let's say like 72 months. And maybe even 96 or something like that. You may even want to make it like 144. But this is essentially going to get you what you're after. I mean, it's going to look back, what, 7, 12 times 7 is 96. Is that right? No, that's not right. That's 84. 12 times 8. So this is going to look back 8 years. You could look back. Let's see how far we can look back. I actually don't even know. Let's say like 200. 250? Oh, I can. Okay. So, yeah. Here you go. So I don't know, you look back, use a look back period that makes sense for you. But this is how I do it. Just use the high, the monthly high. And then just say greater than the range high of the past X number of candles. 250 candle range on the monthly is a big range. That's a lot of time. All right, are we good? Everybody good? We got all the answers, all the questions answered. Oh, like a printout, like a little label on it. I bet you could do that with custom scripting. You might have to play around with it. I am so not a coder, so that's not for me. But I'm sure it can be done. All right, y'all. Well, I'm going to get out of here. G-Sal, Chris, Haverel. Oh, when are you getting Go No Go for screener? Great question. I'm not sure. I don't know. We are like right on the heels of launching the marketplace, which means there are going to be some new Go No Go indicators available. Again, I don't know. I kind of think that they're going to be paid. I think it's going to be a small monthly fee for those, although I'm not certain. Whether they'll be used in the scanner, I don't know, because I have them currently on my account. And I'm almost certain. Yeah. That might be a thing that you have to talk to them about, if I'm honest. It also might be a thing. Well, I don't know. I don't want to assume what's in that indicator. I really don't know what's in that indicator. But you might want to reach out to them, because it's kind of my assumption. And I haven't. Take this with a grain of salt, because I don't have the absoluteness to back it up. But if we could scan for it and they were willing to let that be the case, the guys who made it, then I think it would absolutely already be possible. So I think there's one of two reasons why it's not possible. The first reason why it's not possible is because there are a lot of conditions within that indicator. As you probably know, it stacks. It's an indicator stack with a very just basic color-coded layout. But under the hood, it's an indicator stack. Now, that indicator stack might utilize more than 4 time frames. I don't know if it does, because I really don't know what's it's comprised of. But if it uses more than 4 time frames, then that would make sense why we can't scan for it. Any other reason? I think the only other thing I can think of is that maybe they don't want it to be scannable. I don't know why that would be the case. Next time I talk to them, I'll ask them for you. But those guys are great guys. They're really sweet. They're on social media. You can hit them up and ask them. So I would actually recommend, just go straight to the source. Go to the guys that made it. Tyler and... oh, darn, I can't think of the other fellow's name off the top. I'm sorry. Alex and Tyler. I would maybe hunt them down. Tyler is a huge, he's in CME or CMT rather. I don't know if he's the head of the CMT, but he's well known in the CMT community. So he's around. You could holler at him. That's probably what I would do. Maybe I'll do that when we get off this and find out, because I really don't know. It'd be cool to have it. If we didn't, Mike, last week we discussed chats. If you haven't played around with chats yet, the chats indicator, that's the Chandi absolute trend strength indicator. If you just type in chats in your indicators search box here, you'll see it. What I would tell you to do is do this. Check out Chandi absolute trend strength indicator. Turn all this stuff off. Set up 2 charts. And then on one side, put the Chandi, and the other side, put the Go-No-Go. And make some assessments like that. Because you can scan for Chandi. And Chandi is just a numerical value from -100 to 100. Tick data, I don't know. I do not know about tick data. That would be dope, but I don't know. I know we were talking about footprint charts recently too. I would love to get footprints. But yeah, GSAL, if you were not here last week, we did talk about this. I would recommend playing around with chats because it is scannable. And there are a lot of scenarios where it lines up nicely. It doesn't always, you can see right here, you had that strong go reading on the Go-No-Go and it didn't appear on chats. But in a lot of cases, they align pretty decent. Not perfectly, but pretty decent, which means they're tracking similar things. They're not tracking the exact same things, but it might be a decent enough approximation for you to kind of get you part of the way there. If you're looking for really strong go, maybe you're scanning for chats greater than 90 or something like that. Or if you're looking for these like weak go, you're scanning for chats -90. Or if you're looking for go fish, you're scanning for chats 0. Right? Like, kind of think through it a little bit and kind of use them. Use chats to your advantage in that way. All right, y'all. I think I'm going to call it. I think we got everything. Is that everything? We good? If you enjoyed this stream, please give me a like if you haven't already. If you are not yet a subscriber to the channel, what are you waiting for? We do this a couple times a week, or at least usually about a couple times a week. And essentially, the more subscribers we get, the more you guys tune into this, the more likely I'm going to be able to continue doing them. So if you enjoy these, you find value in them, subscribe to the channel, give the video a like. If you want to take the extra, if you want to go the extra yard, hit up customer support using that contact us button and just let them know you're loving office hours and you want to see them continue on. And that'll mean we'll continue doing these. If you're not yet a TrendSpider trader, seriously, what are you waiting for? Now is the time. There's never been a better time than right now. We would love to have you on the platform. And there is a killer discount in the description of this video. I'm not going to just make it so easy for you, but it's there. If you're not yet a TrendSpider trader and you're interested in the platform, you think you might want to get signed up, you think you might want to play around with all these tools, take advantage of that discount offer that is in the description of every office hours video. It's a great deal. And yeah, I'm going to get out of here. I hope you guys have a great day. Big thank you to Havarel for all the questions, and Mike and G-Sal and Chris, all familiar faces. Great to see Billy. Great to see all you guys here again. I really do appreciate it. I hope you have a great rest of your day. Trade them well. And we will see you again very soon. Yeah? All right. Take care, guys.